Posed it.
All right, go.
Hey guys, it is Megma with Century 21. I'm super excited. We are here with Ann Sabaugh from Sea Coast Mortgage. I swear, it's not even Friday yet, but we're here.
Okay.
We're talking about private lending, and we're going to talk about a bunch of different things. But we'll introduce yourself, obviously.
Okay. Hi, I'm Ann, Seacoast Mortgage, and today we're going to talk about the other company that I own is K&A Realty Investments, and that's the exciting company of the day.
She's a boss.
Yeah, I'm the boss. That's the exciting conversation of the day because private lending is really hot right now. Meg, as you probably know, when you go for an investment loan, lenders are so you have to have the right rental income amount to cover your debt. You need the 25% down. They're going to really analyze you and your credit as well as the property.
Well, you're just a number.
You're a number.
You're
And
a
also,
number, and
with
things
the-
have to be checked off.
Everything has to be checked
Right.
off. And with the higher interest rates, what's happening is some of these investment properties are not being approved by lenders. So what I've been doing is saying, hey, come to see me. I'm allowing a 15% down, maybe even a 10% down. I did 100% the other day because...
Well, this is why this came about, right?
Right.
We all as realtors, as people, have different kinds of borrowers, right? And so some people might not have the 20% down,
Right.
but it still makes sense. If you were to put down 15% for you as a lender, you'd be like, well, this is still going to make money. I'm
Right.
still going to make my money back. I'll approve it.
Right, exactly. Now, private lending, yes, it has a higher rate, but it's interest only. So when you look at a full payment of principal and interest,
what is
versus
interest? What is interest only?
Interest is you don't pay on principal. So let's say you borrow $300,000, the payment would be $3,000 a month. You're not paying on principal. Now, some of you might say, well, that's so dangerous. You're not buying down, paying back. But the whole premise is before I say yes to this private lending is you make sure that there's a takeout position. So you say, okay, maybe you're going to rehab the property. Okay, you're going to do 15% down. You're going to do X, Y, and Z. And at the end of the day, it's going to have 25 to 30% equity. Then we refi it into a traditional investment product. So what's it do for you? It gets you into the house, collecting rent, rehabbing it. The rents increase, and you just increase your net worth.
Just like that.
Just like that. Now, maybe I'm making it all sound simple, but I've done it so many times for so many people, and what we love about it is that it's empowering. You're a young couple, you want to buy your first investment property, you don't have the 25% down. Even if you put a second loan on your property, you may not want to do that. Maybe you just want to do the 15% down and collect rental income. Now you're becoming self-sufficient, like we spoke about.
But it's
earlier.
also again, who cares if it's interest only and you're still making money on it?
Right. Exactly. What's the problem? Right. But
and you're covering your expenses, obviously, all the things,
everything.
Yeah.
Yes, absolutely. And have I covered rehab costs too? Yes. I helped somebody 100% financing. And how did I do that? I attached one of their current properties that they had a lot of equity in. I just did a blanket cross collateralization, it's called. You blanket the two loans together. So I'm protected. But at the same time, I made sure that they could pay all the expenses on both properties, including the mortgage that I gave them. I would never lend to somebody that they couldn't cover the mortgage with the rents. That makes no sense. Right. For anybody. So it's such a phenomenal alternative right now because the interest rates have gone up. Some of these properties aren't cash flowing, and maybe because there's older people living in there, they haven't increased the rents, the landlord's being nice. But once you go in and you rehab, they should expect a higher rent. Right? A better place demands a higher rent. I look at some of my investors in Rhode Island. They went in, the old tenant was paying $1,200, and then they rehabbed it. They're getting $2,900 a month now.
Right.
For a 3-bedroom. That is tiled, jacuzzi, central air. Some have skylights. They're beautiful.
Right.
I'd live in one any day. Hook me up.
So you are talking about the rehab loans that you can also assist with that.
Yes, with the private lending.
With the private
lending.
lending.
Yeah. So I gave, purchase money plus rehab because I did the cross collateralization. But it's
so those
really
are 15% down?
No, this one was 100% because he had so much equity into the property.
Right, so it's good to just come talk to you to just see what all the options all the options.
All the options.
Yeah, like you have FHA, VA, everything and everything.
Well, with investment, you
Right.
can't go FHA and VA.
Right.
You either have
But
to
that's
go.
what I'm saying. It's
right.
like nice to go to you because you
Sure.
have all the product. I'm saying like
Sure.
you have every single product for every
Exactly.
single kind of investor.
Right.
If it makes sense.
Yes. I've even lent to people that with poor credit. Why? Could have been a divorce situation. You know, but they're making $200,000 a year. They have other properties and they have terrible credit because of a divorce. Private lenders, at least I don't care about that credit as long as you have a good explanation.
Mm-hmm.
You need a good explanation.
Yeah.
And then
Yeah.
you're fine.
Right.
But this is empowering. It's a win-win. It's, you know, I got a text from somebody the other day and they're like, Ann, thank you so much. You know, you're helping us realize our dream when banks are saying no. It's like when banks say no, Seacoast, K&A Realty, we want to say yes.
Right.
Because it's just
Well, it's beneficial for everybody.
everybody.
Yeah.
And it helps this economy.
Right.
Right?
Right.
Which definitely needs some help.
Yeah.
So, yeah, Megan, it's really exciting. Private lending should always be an alternative to
Right.
investors, especially those that have tried and the banks have said no to.
Mm-hmm. Do you do like any commercial lending for that? I mean, like more, you know, for construction, like larger construction or.
Yeah, I don't do. Somebody called me the other day, will you do a $50 million loan? I'm like, no, it's really not mine. No. I mean, have I done, the biggest loan I probably have ever done is $5-6 million. I mean, I could send them somewhere, they need a $50 million loan.
Yeah.
But that's usually those loans get syndicated, which
Yeah.
means that several banks come in and they share in the risk pool. But I'm here in Rhode Island, Mass, Connecticut, Florida, New Jersey. I cater to the seasoned investor, the first time investor,
Right.
somebody who wants to build a portfolio.
Yeah, I mean, I'm just thinking for, you know, like I've been working on some divisions, you know, and kind of seeing how that all works out in terms of lending and, you know, for some bigger projects.
Right. So subdivisions meaning like single family homes.
Yeah, sometimes single family homes. Yeah, those would be single family homes. Other, you know, condos.
Okay. So the single family homes, usually the builder gets a line of credit from their bank.
Mm-hmm.
I'll get those calls sometimes, but if I get them, that usually means that they were denied by their bank.
Mm.
So I don't private lend on those.
Yeah.
That's huge. That's like a huge risk.
Yeah.
Unless they had properties that I could cross collateralize, because now what you're doing is you're buying the land and you're risking your money on will these homes sell, but usually that they have a line of credit from the bank
Okay.
to build. They build one, then they sell, they build another, and they go on and
Right.
on and on.
Right.
Yeah.
Right. So that's cool. So, I think that's anything else you want to say about private lending or?
No, it's just always should be a option that you consider as an investor, and it's not about payment, it's about your ROI, your return on your investment.
And what do you typically look at for that? I mean, like
Double
what is the
digits.
percentage? Yeah.
Yeah. I mean, some people I've worked with, they're happy with 70%, but when I see something that's yielding 10%, I'm like, I'm all in. I think a double digit return is great for the investor. And
Right.
what's wrong with 10%?
Right.
I mean, yeah, you can get on a money market and get 3% on a money market. You can get 4.5% on T-bills right now, but where are you going to make 10%? Real estate.
Right. Yeah, I mean that's why it's also it's so exciting. It's like you're literally making more money and it's more stable and it also has huge tax benefits.
Right, and we'll talk
And
about that.
we'll talk about that in another section. So
yes.
Stay tuned for one of the videos that we're going to talk about depreciation,
We're going to talk about the depreciation. We love appreciation.
We love appreciation, but depreciation and, you know, things that you have to consider and why it's an important time to sell if you're already fully depreciated.
Right.
Right.
We'll talk about that.
All right.
Stay
Stay tuned.